What's up, everyone? I wanted to do a quick video here specifically on gold and its implications over the next week or two, because this is a period of time where we've got quite a lot going on, a lot of volatility and market moving events in the future. So interestingly enough, gold has climbed up back to where near the recent highs at the recent highs are at 124. We closed today at 122.78. So I've been talking about how I thought it would go back to 18 and then 120, 121, and then now I've said that I think it's going to go back to these recent highs and possibly beyond. But today is interesting because tomorrow is the Fed FOMC rate decision and the Fed statement, which will be very telling about where gold ultimately will go in the future, and that's dependent on the US dollar and Fed rates. Now that's tomorrow, and then on the 23rd is the vote for Brexit, whether Britain will stay in the Eurozone. Not the Eurozone, the European Union. So both of those have a lot of implications for gold. So I just want to do a little run through a few scenarios and possibly try to predict or prognosticate where gold will go in each of those events, and then give an opinion on how likely those events are. So the FOMC rate decision, I believe there's the market's pricing in like a 2% chance of a rate hike this time around, so that's pretty much can discount that from happening. So probably no rate hike in this meeting. The question is whether it will happen in July, August, September, etc., etc., etc. When will the rate hike happen? Will it happen this year? How many hikes do we see in the future, etc.? So with the economy where it's at, and with the Brexit on the horizon, my thoughts are that they will be more dovish than hawkish, and that will lead gold to this 124 area. So that's my prediction. There's kind of three different scenarios, we'll say, or four, however many. You can split it up into as many different ideas. But there's the super dovish, saying we don't see any hikes. Where they kind of roll back this idea of rate hikes and say, you know what, with the headwinds, market headwinds, then I don't know if we're going to see that. We're rolling back this idea of rate hikes, and we'll hold back on that indefinitely. That would be super bullish for gold. The dollar would get some weakness from that, and gold would probably move quite a bit higher over the next week. I don't think that's likely. The Fed has been preaching these 2 rate hikes and so forth, and they're going to be reticent to come off of that completely, so I don't think that's very likely. I think it's something more moderate than that. The other side would be they kind of talk about the rate hikes, but then say, we'll be monitoring this Brexit idea, we'll be monitoring economic headwinds and jobs data, which has been a little bit weak lately, and we will base it on that decision. So that's I think what the markets would consider dovish language compared to previous. So I think that's the most likely, that they won't say, they'll try to keep the idea of a rate hike possibility, but kind of back off of it a little bit. I think that's the most likely. I think that will also take us probably to the 124 area before Brexit, and that's the idea. I think is the most likely scenario. The other scenario is saying, we're not. There's no rate hike now, but and maybe not in July, but September, December there will be one. So basically, a more hawkish version of the previous argument, where they say, we still plan on having a rate hike this year, etc., etc., etc. So that is probably neutral for gold. And then the obvious one would be July, September, we're definitely having a rate hike, and possibly another one in December. I think that's probably about as hawkish as we can realistically guess, and I think that would be probably short-term bearish for gold, and we would go back to possibly this 120, 118 area. That being said, I think, like I said, I think the most likely is a more dovish, the possibility of not a rate hike in 2016. I think that, well, I wouldn't even go that far. I would say this idea that we're monitoring conditions and we will be accommodative in respects to whether we hike the Fed rate. I think that's probably the most likely scenario, and that's probably bullish for gold. So we've got about then from there to the 23rd, there's two options, obviously, with Brexit. Whether they're either going to vote to stay or they're going to vote to leave. And so if Britain votes to leave, I think that would be put the markets in a bit of turmoil. But that's also bullish for gold. I think there are a lot of money run into both the U.S. dollar and gold. I think it would also weaken the idea of a rate hike. And so I think if Brexit happens, there probably won't be a rate hike. So that will be bullish for gold as well. And so even though that's probably, I think at this point, it's like plus 135 if you're in gambling terms, that we're not, that they leave. So it is an underdog chance that Britain leaves, but it's, 55-45 or something like that they'll stay. So if they do stay, I think that is slightly bearish for gold, because that uncertainty comes out of the market, and so gold could churn off of that. And so the ultra bullish for gold scenario is Fed says we're dovish, we might not even have a rate hike here in 2016, and then Britain leaves the European Union. That would be super bullish for gold. Super bearish, the Fed says we still plan on having a rate hike possibly in July, probably, if not July, September, and then Britain decides to stay. That would be bearish, although I still think we would hold at this 115 level if that's the case. So I think net from this is that gold probably goes higher from here in most of these scenarios. So overall, I would say you got to be bullish gold, and if I wouldn't say super bullish, because we still have rate hikes, and unless there's a recession, I think the idea that the Fed would go back into quantitative easing isn't necessarily likely outside of an economic downturn, which may or may not be happening. We'll see, and we'll see what the risks are. But that's a little bit of a rundown of where we could go from here and the event risks that lie ahead of us. So you want to be careful. This is definitely a more volatile market with volatile event risk ahead of us, and so you want to be very prudent and judicious. And with all that being said, trade them well. God bless. Good luck. Great trading.